Good evening, guys. Today is the 12th of September, Tuesday. Hope everybody's doing well. Markets were fairly weak today. The Dow Jones dropped nearly 0.5%. NASDAQ dropped 1%, and the S&P 500 dropped 0.5%. So overall, weak markets today. Today, I thought I will check in on a stock, go through my 5 steps with a company called MNDY. It is actually Monday.com is the name of the company. As always, I start with the fundamentals first. I always want to take a look at whether we're holding quality companies or just companies without anything that I think is useful to even contribute to. So annualized revenue first is usually a good place to start. Then I usually look at the balance sheet, but let's look at the revenue first. Growing at about 100% in 2020, slowed down to 90%. So about a decent, but still 90% drop from 100 is not bad. Dropped to about 70% in December 2022. So its growth is definitely slowing, and the company is still losing money. It's about $150 million last year in losses. So trailing 12 months is about $625 million. The market capitalization is about $8 billion. So that seems a little bit rich for me, but let's keep looking at it even further. On a quarterly basis, revenue has dropped from 90%, 60%, 50%. It's consistently dropping. Now to the 40% range. It's dropped to the 40% range. So if you project that out, and if you look at 160, 170, let's say this is the midpoint, Q1 is the midpoint. So 4 times that will be about 700 million in revenue. 700 million in revenue, roughly about 11-ish, 10 point something times revenue is what it's trading. It's about 13 times. Look at that. So it's 13 times price to sales ratio. And since it's not making money, there's no PE. So rich company, 40% is still growing fast relative to some of the other companies that are in the software as a service space. MNDY is a software as a service company in the task management, work management, project management space. So zoom out first. Let's look at the chart on from the day it has gotten IPO somewhere in the 21 July, June timeframe, June 21 timeframe, did a significant acceleration. So let's just show you what I would think through. So this went up pretty well. And then it kind of based for a little bit of time and then went down. Oh my goodness, that was good drop. Not good, but it's a drop. And then kind of based again. Formed a U formation, tried to break out, broke down again, retested the lows, didn't go as much as it could, but tested a very key low. So this is a key pivot point, I would say. Somewhere in the 115, 120 mark is a key pivot point. And then it staged a very big rally on a monthly basis up in the month of, closer to the range I would expect in the last few months. It's been growing fairly well. So it did a very good job in the month of May, and then starting to base again. So that's my thinking. Right now, it seems to be basing. It's hitting the resistance on the top. So this is a key resistance point. I'm going to draw that and say it's tried to break this resistance. Look at this, once, twice, failed the resistance, and it's tried this even sometime in the March 22 timeframe. So this is a key resistance. And in terms of support, I'd say this range, I'm going to draw one here as well. It's tried to test this range a couple of times. So it's right now at that point where it's close to testing 160 range. So 190, 160. And right now that high level monthly view seems to be it's in a stage 1 consolidation. So remember again, stage 1 is consolidation, stage 2 is acceleration or uptrend, then stage 3 is distribution, and then stage 4 is downtrend. So this is a clear stage 4. This is a good stage 1. Try the stage 1 within this month, and now this is back in stage 2. Sorry, this is back in stage 1. So then let's go down a little bit lower into a weekly summary time frame, knowing that right now it's basing. So if you had to think about a basing, now you can see that this range that I've drawn in terms of the ability to be able to base needs a little bit more because it's tested some more below that. So I'm going to take that support area and move it right to the right point. Let me move that out because that was not the right point in any event. We'll probably have to make it a little bit lower. See, this seems like a good point. It's tested this 149 range. On the top, it's tested the 120, 190 range a couple of different times. So keep it around the 147, 150 range. It's going to probably test that range, but it's still in this overall, from an overall standpoint, 190 and a bottom of, no, that's too little. So somewhere in the 150, 145, 190 range, it seems to be hovering back and forth, building itself a strong base. What does the volume look like? It's not terrific, but there have been some days that are better than usual. Volume is definitely more than it was way back then, right? So on the weekly, see more than anything else, just multiple attempts at being able to go to the top and then failing a little bit. Look at some of these candles specifically on the daily basis. Let's go down to the daily chart. On the daily chart, this is more clear. Look at that. I'm going to move the base again where it tested a little bit lower. There you go. 144.9 seems like a solid base. But if you want to get a little bit more tighter, you definitely want to see if it is bounced in the, look at that range, 157 range. So on the short-term basis, if you had to look at it from a short-term basis, 157 on a moving average, they're all trending kind of flat to lower. So my suspicion right now, again, it's a probability, technical analysis to a large extent is about probabilities. You cannot for certain predict the future, but what you can do is assign probability. So my prediction in terms of a probability, and the probabilities would be that it's gone through a downtrend. It's trying to stage back up. Look at this beautiful green candle on the day after the earnings. Tried to rally a little bit, hit against this this 170, 179 mark as a resistance, fell down. My suspicion is in terms of probability, I'm going to put a higher probability of it touching 157, maybe touching this base and then trying again back up. Given the overall market conditions, it definitely looks like this might take a little bit of a break, but it's getting close to on the daily, it's getting close to the 100 100-day moving average. And let's look at what's happened. It's never really touched the 100-day moving average for quite a bit of time over the last few months. It broke down here from the 100-day moving average, definitely did well. 149 was a good 200-day moving average touch line. So it's touched the 200-day moving average. I wouldn't be surprised if it touches the 162 for sure in the next couple of days or so, and then tries to attempt to reverse on the 162 range. And also tries, if it goes lower, if it breaks that. So higher probability wise, I would say it's definitely going down to touch 157, but it might bounce off of the 162. That's the second probability I need to be prepared for. I certainly don't expect it to completely reverse off, but it'll probably touch this range. And this has been a consistently good support, 162 range. So I'm going to put one more support line here and say, let me watch in the 162, 163 range. Look at how many times. Let's point out those multiple times that it's actually hit that range, if you will. This is one time. This is another time. This is a third time. So it's hitting it fairly frequently. So 162 should be a good. Expect a bounce in terms of 60% probability. I would say it bounces off of the 162, and then 40% probability it bounces off of the 157 or touches down to the 157. So got a plan for both. 162 bounce, 60% likely. 157 bounce, probably about 40%. Thank you for watching it. I appreciate all of your time, and please like and subscribe to my channel.